All right, let's talk about a word that can feel, well, a little complicated. Insurance. But what if it's not complicated at all? What if it's just a simple promise? Today, we're going to strip it all back to the basics, using one of the most common types out there, life insurance, to see how this whole thing actually works.
So, here's our game plan for the next few minutes. We're going to start with the big idea, this concept of a financial safety net. Then, we'll look at the actual agreement that makes it real. We'll get into why both sides even make this deal, before we zoom in on life insurance and wrap up with its simplest form, term life. Sound good? Let's dive in.
Okay, so first up, the financial safety net. Before we get into any of the jargon like policies or payments, let's just talk about the core reason insurance even exists. It all comes down to a really basic human need for security.
I mean, just think about that for a second. A net. Something to catch your family from the financial free fall that can happen when the unexpected hits. That feeling of relief, right there, that's the entire reason insurance was ever invented.
So if that feeling of security is the why, then how does it actually work in the real world? Well, that brings us to the formal part of it, the insurance agreement. What is this thing really?
When you boil it all down, insurance is just a contract. It's a formal promise where one side, the insurer, says, "Hey, I've got your back," and agrees to shield the other side, the insured, from a specific defined financial hit.
And there are really only two key players in this whole arrangement. You've got the insured, that's you, the person looking for that peace of mind. And on the other side, you have the insurer, that's the company providing the protection. It's a straightforward two-way street.
And the mechanics of it are pretty simple, really. It's a three-step dance. First, you, the insured, make these regular payments, and those are called premiums. In exchange for that, the insurer gives you protection. And then, this is the important part, if that specific thing you're worried about happens, the insurer pays out a chunk of money called a benefit. So it's a simple trade, small, predictable payments in exchange for a big potential payout.
Okay, so we see how it works, but that kind of brings up a bigger question, right? Why does it work? What's in it for everybody? This is where protection and profit meet in the middle.
Let's really look at the motivation here. I mean, why would you, an individual, and a massive company both willingly sign on the dotted line for this deal? What does each of you get out of it?
And the answer is actually pretty elegant. For you, the insured, the motivation is super clear. It's protection. You pay a little bit of money that you know you can afford to avoid a massive cost that you probably can't. For the insurer, it's a business. They're motivated by money. They collect all those small premiums from thousands and thousands of people, knowing that statistically, only a few will actually need that big payout. It's a system where everyone's needs kind of line up perfectly.
All right, now that we have the basic blueprint for how all insurance works, let's apply that thinking to one of the most common and probably one of the most important types out there, life insurance.
Now, life insurance usually comes in two main flavors. You've got term and you've got permanent. They both do different things, but to keep this really clear and simple, we're going to focus on the most basic one to start.
And that brings us right here to understanding term life. Seriously, if you want to get your head around the basics of life insurance, this is absolutely the best place to begin. It's the foundation for everything else.
So, what is it? Well, the name kind of gives it away. Term life insurance is coverage that only lasts for a specific period of time, a term. This could be 10 years, 20 years, maybe even 30. The key thing is, it's protection with a very clear expiration date.
In fact, you'll sometimes hear it called temporary insurance, and that's a perfect way to think about it. It's not designed to last forever. It's built to cover you during a really specific chapter of your life, like when you're paying off a mortgage or have young kids who depend on your income.
And this gets us right back to that central promise we talked about. It doesn't matter if the protection is for 10 years or for a lifetime. The core idea is always the same. If the worst should happen during that term, the insurer pays out that benefit to help ease the financial blow for the people you leave behind.
So here's the big takeaway. When you strip away all the fancy language and the paperwork, insurance is just a tool. It's a financial tool for managing risk. You're choosing to accept a small, definite cost, your premium, to protect yourself from a massive, uncertain, and potentially devastating financial loss.
So we'll leave you with this one question to chew on. As you go about your day, just take a moment and ask yourself, when it comes to the people who are counting on you, how strong is your financial safety net?